So a question I get asked on a regular basis is commercial real estate just failing? Is it falling? Are we done? Is we're not going to see anything for commercial real estate go on? And the answer is it really depends on your product type. See, commercial real estate is actually built up of several different product types, and of that, several different sub-product types, where myself as an office broker, I may pay attention to office. However, downtown office is different than suburban office, and medical office is different than all those. So there's always a difference. So let's kind of dive in and take a look at what's going on U.S.-wide, nationally. So when it comes to office, probably the most significant change that we've seen really comes down when you're looking at the price per square foot of properties that are sold. And from there, we've seen those prices drop from about $300 or so per square foot to about $287 per square foot, which is about a 6.5% change. Conversely, if you look at a cap rate, which is the way we measure investments, it's been about a 0.5% increase as well. So we've seen prices come down about 0.5% in the cap rate range. And then if we start looking at it from a leasing perspective, we've actually seen that relatively flat as well, with a 0.5% increase in what rental rates are actually asking for. So overall, yeah, we're seeing some pricing on the sales go down, but we're also seeing some pricing on the lease side go up, which is good news for the office market if we're trying to continually see more and more demand. If rents are going up, that means there's more demand. Now looking at industrial's been a little bit different. We have seen those prices actually drop about 2% when looking at a price per square foot, or if we're looking at a cap rate, about 0.75 of a point is the difference that we've seen when it comes to the values basically dropping within industrial, which if you look at a couple of years ago was drastically different because they just kept going up and up and up and up. We're starting to see some of that equilibrium where we've built enough, and now we're starting to see things start to come back down into a more relatively natural state. Again, 2% is not a huge increase or decrease. It's definitely something to watch and kind of take in mind. What I think is a little bit more interesting in this one is that rental rates have actually increased almost 6% in this market as well. So again, these are national averages, so they could be very different in your local market, but a 6% increase is pretty good. And for most investors, that's not a bad place to be, seeing 6 or so percent increase, especially given where inflation and such has been doing in the last year or so. Now, retail, on the other hand, is kind of an interesting story where we've seen a lot more retail demand, especially for those areas that are seeing a lot more migration coming in versus migration going out. If you look at the national average, again, per price per square foot, you've seen about a 3% or so increase per price per square foot, as well as you look at rental rates, have kind of had that same 3% increase of rental rates through all that. Cap rates, again, how we look at an investment side, those have stayed relatively flat. Now, the one everybody seems to be paying attention to is multifamily. It's the sexy one. Everybody wants to invest in multifamily. That's where everybody wants to be. It's a little interesting where they're at. So right now, if you look at it, we've got about an 8.25% decrease in property values when looking at it on a price per square foot. That's about a 0.6% increase to cap rates. So seeing those pricing come down just a little bit. But we've also seen that the rental rates have come up as well, but only about 0.75 of a point or so as our percentage point as well. So we're seeing some value come down, but we've also seen, a little bit more rental rate increase as well. Now, the tricky thing with this one is like something like $46 billion worth of loans coming due. That many of it was interest-only loans. So they're going to be coming due this year, and that does take in fact that we're going to see some type of correction in the market depending on what we do, if we see new capital come in or what's going to happen. And to me, everything else feels relatively okay. It should be business as normal. Maybe office feels a little weird, but I think when we start looking at the multifamily, to me, this is the one that's going to rock the boat one way or another, especially coming into 2024.